The most powerful RSI leading signal trading strategy. This is the best scalping and swing trading strategy that no one ever told you. So, by the time you finish this video, you'll know exactly when to enter high probability trade using the RSI leading signal. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. The RSI is a very reliable and popular momentum indicator. Scalpers and swing traders use it to make the most profit during trading in the market. But for beginners, it can be tough to understand its signals. At first, it might seem easy for new traders to jump into the market using the RSI indicator. However, in reality, many of them end up losing money because they don't know how to use it correctly. As a result, even though the RSI is a trustworthy indicator, it often gets misused by beginners. Therefore, the relative strength index is often undervalued by beginners who fail to grasp its parameter workings. The real solution is that you should be able to read the RSI indicator through charts to assist you in gaining profits during trading. Once understood and applied correctly, the RSI has the ability to indicate whether prices are trending, when the market is overbought or oversold, and the optimal price points for entering or exiting trades. The RSI is a reliable tool for all forex and stock traders. So, if the trades generated by the RSI are not very frequent, it's not a problem, as long as they are high-quality trades. The secret way to use the RSI indicator. The RSI indicator moves between 0 and 100 and is widely used to identify overbought and oversold conditions in the market, spot divergences, and detect general trends. To calculate the RSI, divide the average closing price of up closes by the average closing price of down closes. There are many different uses for RSI, but it can be altered depending on your specific needs. However, one overlooked method of using the RSI is employing direct trend lines on the oscillator itself, similar to how they are used on price charts. The RSI trendline strategy is essentially a reversal strategy that utilizes the RSI indicator in an unconventional manner. It is the most effective way to use the RSI indicator. Unfortunately, not many novice traders have mastered this technique proficiently. Basically, trend lines are easily recognizable lines drawn by traders on charts to connect a series of prices or show correlations between data points. The lines created are then used to give traders a good idea about the direction of investment value movement. They are used to indicate upward, downward, and sometimes sideways price movements. Confirmed trend lines are drawn by connecting low or high cycles with at least two other significant high or low points on the chart to create the most suitable line. When applied to the RSI indicator, the rules for RSI trend lines remain the same as when applied to price trend lines in the markets. We simply need to connect the recent peaks or valleys of the RSI with the trend line. When a trend line is breached, it alerts us that the market has lost momentum and continuing its trend, allowing traders to find trading opportunities with a good risk-to-reward ratio. Since the RSI measures price closing surges, significant price movements can occur when the RSI changes direction and breaks above or below the trend line. So, let me try again to explain the basic rules of trading with the RSI trend line. We will use the RSI indicator to show us when the current trend has ended and a new trend is emerging. In this strategy, we won't measure overbought-oversold conditions or use crossovers as the system. Instead, we'll take it a step further and look for momentum breakouts from the prevailing trend. What I mean by this is that we'll examine the price changes relative to the changes in peaks and valleys that the RSI indicator will produce. Placing trend lines on this oscillator provides additional precision and extra trade setups. Since the trading signals generated are leading rather than lagging, stop-loss orders can be placed below or above the candle, where the RSI breaks its trend line. This allows for a good risk-to-reward ratio. The next step is to trade the price based on its trend. For instance, if the RSI trendline is breached upward, the price should be traded above the trendline. In the forex and stock markets, the most commonly recognized trend line by professional traders and financial institutions is the 200-period simple moving average. This principle is crucial for the RSI trend line strategy to work as it informs us about the difference between momentum and price. Momentum always precedes price, and that's why this strategy can yield significant returns. Breaking the RSI trendline usually precedes a trend change on the price chart, providing an early warning of a reversal. Therefore, recognizing RSI trendline breakouts can be an important and profitable indicator that the price direction is about to change. This is known as a leading signal. Leading signals emerge before a new trend or reversal occurs. These signals are highly helpful in preparing you for the upcoming main trading signals. If you use leading signals directly as triggers to enter the market, your profit potential can be significantly higher compared to the risks. However, leading signals have weaknesses, particularly in signal accuracy. When you use leading indicators, you will experience a lot of fakeouts. Leading indicators are notorious for giving bogus signals which could mislead you. That's why it's important to look closely at the price action or look for other confirmation signals. This is a common mistake. Many traders apply the RSI trendline breakout approach and use it as a reversal signal for any situation. They see an uptrend, notice an RSI trendline breakout, and sell. Sure, it might work sometimes, but it's not the most consistent way to use it. We take a more conservative approach to the RSI breakout trend line. When we observe an uptrend based on the 200-period SMA, we look for RSI trendline breakout signals that offer buying opportunities. We are not interested in RSI signals that suggest short trades. We go with the main trend. An important note that must always be applied in this strategy is that the trend line formed on the RSI must be a genuinely valid trend line, not a forced one. For clarity, here is an example of a valid trend line or a perfect RSI trend line. Alright, let's make everything clearer for you. Let's take a look at the following examples. In this bullish chart, we see the price moving above the 200-period SMA. This means that all traders, whether retail traders, big traders, or institutional traders, agree that the market is in a bullish trend. Here, we find a valid RSI trendline. It provides additional visual confirmation that a trading opportunity is approaching. Using the RSI trendline breakout gives a buy signal a few candles before the actual movement. After the RSI trendline breakout occurs, you should enter the market immediately by opening a buy position here and setting the stop loss below the nearest swing low. In another chart, we can see how a short setup would look like. In this case, we have the price moving down below the 200-period SMA, which means that all traders, retail, big, or institutional, agree that the market is in a bearish trend, making it a valid bearish trend. We add a trend line on the RSI indicator when the price is moving against the main trend. As we discussed earlier, this is a valid RSI trend line and not forced. Then we identify the RSI trend line breakout in the sell direction. Next, we will open a sell position here, placing the stop loss above the nearest swing high. The price continues its bearish trend, allowing us to gain a decent profit compared to the risk we set. Choosing the right period for the trendline RSI strategy is crucial. The RSI, like most other oscillators, defaults to a 14-period setting. This means the indicator looks back 14 bars on any chart you view to make its readings. Although 14 is the default period, it may not be the best setting for your trading. In this strategy, the 14-period RSI can work effectively only on time frames like M30, M15, and M5. However, for time frames like H4 and daily, we should use an RSI period of 8. But that doesn't mean you can't find the best setting for yourself. The key is to perform backtests and find the most suitable approach that aligns with your trading style. This should be straightforward. Now you can put everything we discussed in this video into practice. You can customize your trading system, or if you want to use the exact settings shown in the video, I've included a template with the system. Just upload it to your chart and it will automatically plot all the indicators perfectly on your charts, so there's nothing to worry about. You can find the download link in the description. Here are additional examples of the RSI trend lines break trading to fully understand this wonderful strategy and to make the most out of it. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.